It's Thursday, September 29, 2022. Well, the market hope did not last very long. The market hope that we saw yesterday when the Bank of England did a pivot, brought back quantitative easing, bailed out pensions, bailed out homeowners, that hope that we would do the same thing, that the Federal Reserve, Jerome Powell, would do the same thing and pivot and bring back QE, did not last long because it's not going to happen here anytime soon. Dow Jones down over 450 points today. NASDAQ down over 300. All the gains from yesterday, all the hopeism evaporated today. We have big trouble, ladies and gentlemen. Peter Schiff said something today that I thought was very interesting, and let me paraphrase. Markets are very wrong about the economy, and they're very wrong about inflation. The economy is much weaker than investors think, but at the same time, inflation is going to be much stronger than investors think. I thought that that made a lot of sense, and I think a lot of people and a lot of investors right now are underestimating how bad the economy really is and how bad inflation really is. It's not 8.3. It is much, much more than that, at least double that. But we have a dying economy and we have soaring inflation taking place right now in the US. I pulled up some of the stocks today that I thought were interesting, and we saw the Dow Jones at one point down over 600. The NASDAQ was down 4%. It could have been much worse today, and it should have been. I don't know if there's something happening behind the scenes. If we still have the plunge protection team, if we still have the Fed in here buying stocks, buying bonds, I don't know, but something is not right, because I think these markets should have been down much, much more with the data that we're getting. If we look at some of these home builder stocks year to date, DR Horton is down 36% year to date, Pulte Group down 33%, NVR Inc. down 32%, Lennar down 36.75% year to date, KB Homes is down 39.78% year to date. PepsiCo today announces layoffs, announces cost-cutting measures as company braces for recession. Bed Bath & Beyond down 7.8% today, down over 60% year to date. Carmax down 24% today, down 48% year to date. Ford down 5.83% today, down 47.3% year to date. I don't even know how this economy is even functioning at this point, how the stock market really isn't. I mean, it's way down. Don't get me wrong. It should be down a lot more. These numbers are horrific. And this is just some of the numbers. We could go on for hours and go over some of the data here, how bad it is. But this just gives you an idea. When you're looking at double-digit losses year to date, it's shocking how we're even functioning at this point. How bad is the U.S. economy in real terms? How bad is it really out there? We're not being told how bad it is. Article from The Hedge today. Searches for real estate market crash highest in internet history. Searches for real estate market crash exploded 284% in the U.S. as of September 2022, the highest level in Google Trends history. I think that this tells us quite a bit. I think it's a huge indicator that people are beginning to realize something is wrong, things are breaking. The real estate bubble has begun to lose air. Now it's a question of how bad is it going to get? How low could prices go in housing? And when you look at these home builder stocks, look, this is just the beginning. A couple months ago, we couldn't hear enough about how real estate was booming and how busy the real estate agents are and how many new homes are being built, and it's never going to end. And just a few months later, here we are now, the real estate market crash, highest search in internet history, and you look at builder stocks absolutely plummeting, and this has just begun. This is just the beginning of the real estate correction. A few months ago, we were talking about the boom. Now, here we are at the end of September, and it's just beginning to correct. And you look at the massive devastation that's already taking place. Real estate offices closing, mortgage offices closing. We looked at, I think it was Lennar out here at their website, and you're already seeing 8, 10, 11% discounts on the price of new homes out here. And it's just the beginning. What's this going to look like 6 months from now? Here's another one from The Hedge. Horrendous Carmax results confirm Fed has successfully pushed U.S. economy off a cliff. Carmax stock lost a quarter of its value just today. We just went over that. So much for the used car bubble. Earnings per share missed by a lot. Came in at 79%, half of the estimated $1.40 that they were hoping for. So it's over. There's no more buying of 6-year-old cars at these used car dealerships with 100,000 miles on them at 2022 new prices. That's over. I mean, think about that. We're literally selling 6-year-old cars with 80, 90, 100,000 miles on them for the price that car would sell for brand new in 2022. But because there were no new 2022s, people would pay the new 2022 price for a 6-year-old car with 80 to 100,000 miles on it. That's the lunacy of what is taking place here. See, this is why it's going to crash, why it must crash. Housing, the auto market, stocks, bonds, all of it, because everything is so out of whack, so overvalued, so far in the twilight zone that it must crash and come back to planet Earth. We need real price valuations of all this. Things need to come back down. And so many people have been priced out of cars, out of homes, because we've had all this institutional money come in and prop it all up. We had a closed down economy. We've had $6 trillion pumped into the economy, into the markets. We've had rates at zero for a decade. We had the Fed buying mortgage-backed securities, propping up even a bigger housing bubble than we had, buying into the stock market, institutional money buying into the whole market. It goes on and on and on, and we could sit here and talk about it for hours. But look, it's all coming to an end, and it must, because it's all been fabricated. It's all artificial. What we need to be doing right now is preparing for the biggest economic crash the world has seen. It's going to be global, ladies and gentlemen. We have $300+ trillion of global debt out there. Nobody is going to escape the wrath of this collapse. Here's another one from The Hedge. NFT trading volumes have collapsed 97% since January peak. Now, I used to have people in the comments all the time telling me that I didn't know about cryptos and NFTs and that people are losing money because they're not in these markets. And look, I don't tell people what to buy, not what to buy, but I know a Ponzi scheme when I see one. I know a fraud when I see one. And people really are gullible. And when you have this much greed out there where people aren't investing, it used to be, I'm going to buy this company, hold the stock for 20 years, and when I get older, I'm going to cash it out and I'll have my retirement fund. But I'm going to buy companies I believe in, companies that I shop with. No. People now buy make-believe things. They buy NFTs, they buy cryptos, and they hope that if they buy it today and they sit in front of a computer screen for 20 hours a day and just watch it and hope enough that they're going to 1,000x their money, that it's going to happen. That's the mentality and the society we've been living in for the past couple years. From January, the digital art and collectibles market went from $17 billion to just $466 million as of September 22nd. $2 trillion in crypto has been wiped out. Digital art collections selling for $69 million. Somebody sold a digital art collection a while back for $69 million. How would you like to be the buyer of that beautiful asset, make-believe asset? Again, this is the lunacy that has been taking place. And all those Lambos with those crypto-themed license plates, the multi-million-dollar NFT art collections, It's done, ladies and gentlemen. It's over. And I think right now, the speculation and the gambling is dying down. And I think that people better start protecting themselves and getting very, very defensive for this tsunami that is coming. I don't believe that cryptos and NFTs and paper are going to protect you from what is about to hit, ladies and gentlemen. If you think it's bad, you ain't seen nothing yet. This is just the beginning. Just like we're beginning to see the housing market crumble, and you see with just the little bit that's transpired, and you see what it's done to the home builder stocks. You're already seeing prices coming down. Sales in Southern California, Orange County, San Diego down 30-40%. Okay, home sales down. Prices not down 30-40% yet, but we're going to see prices down 30, 40, 50, and even worse throughout the country. Not going to happen everywhere, but we're going to see prices across the country get slammed in some of the hottest housing markets, in markets where they told you it could never happen. It's going to happen. Hurricane Ian could unleash $70 billion in losses, insurance market devastation, and an even bigger spike in inflation. Also on the hedge today, the insurance companies that do survive will be forced to sell some of their treasury holdings to raise money to pay claims, which in turn will help spur inflation. Florida, and my heart goes out to everybody in Florida. I talked to my friend Mark the last couple days down in the Keys, and I hope to get down there maybe next summer to do some fishing with him. Good friend of mine, known him for probably 25 years. But he said they got hit pretty hard down there in the Keys, but not as bad as some of the other areas. But my heart goes out to the people. Let's keep the people of Florida in our prayers. But think about the devastation that has taken place. I didn't know that Florida was one of the biggest producers of U.S. fertilizer. Think about the massive billions in tourism, the food crops that have been destroyed. Fishing is a big industry down there, sport fishing. So many boats destroyed, and how many insurance companies will not survive this storm? But again, we're sending money all over the world. We're bailing out student loans. We're now going to see 70, maybe even $100 billion of damage down in Florida. What does this mean for inflation? Inflation is not going away, ladies and gentlemen. It is not going away. We're going to have to really continue to prepare for more inflation right here in America. U.S. home heating costs set to surge 17%. Another article on the hedge today. How is the average person making it right now with the cost of gasoline? We have 20 million households unable to pay utilities, and now the cost to heat homes going to be up 17% this year, this winter. People just cannot catch a break, and my heart goes out to a lot of people who don't deserve this, who work hard, maybe lost their jobs. They're getting a wage cut with inflation. It's really sad. It really is. Yeah, there are a lot of people out there that spent and lived way beyond their means and took all the benefit money and the stimulus money and had a party. But there are still a lot of people out there that worked very, very hard, wanted to work, didn't want to stay home, and they're in big trouble. They really are. And so be very, very appreciative for what you have, ladies and gentlemen, because tomorrow you could lose it all. Everybody now is susceptible to a job loss. We're all susceptible to inflation. Who knows what tomorrow brings? So thank God for the blessings that you have today. Appreciate what you have today, because it could be taken from you tomorrow. Larry Summers, preempts coming crash, says market feels like 2007. I disagree. This is going to be way worse than 2007. The debt today is a million times bigger than it was in 2007. Inflation a million times higher than it was back in 2007. Big layoffs now coming. We've never seen rate increases this aggressive in the history of the United States of America. We did not see this in 2007. We were at about probably around 6% in 2007. We had room to lower interest rates Now we're raising interest rates as we head deeper into a recession, deeper into a depression. So I disagree. I think it's going to be much worse, and it's much different than 2007. Jobless claims hit 5-month low despite Fed's efforts to slow labor market. This is a green light for the Fed to continue raising rates. They're not getting the effect that they wanted. They want to see the unemployment numbers raise. They want to see, unfortunately, they want to see people lose their jobs. And I think we had 193,000 people file first-time jobless claims last week. That's a much lower number. And they want to see that number go up. So they're not getting the effect that they wanted raising rates. So to me, that means they're going to have to get more aggressive raising rates. So prepare for that. If you have a job right now, ladies and gentlemen, it may not be the job that you want. I think, and this is my opinion only, you can comment down below, but I think you do everything you can to keep that job, show up early, do the best job that you can, be appreciative that you have that job. It doesn't mean you're going to work there forever, but right now, having a job, at least one that pays well, is a real blessing and a real asset right now, because I think we're going to see a time here in America where people are going to wish that they had a job. And people will do just about anything when they get hungry. So if you have a job right now, especially one that's paying well, maybe you like your job, do everything you can to keep that job. And these people out there that just, oh, it's corporate America and they don't appreciate me. And if you're getting a paycheck every week, excuse me, if you're getting a paycheck every week, I would be very, very happy that I have a job today. If it's paying the bills and it's putting food on the table, you better thank God you have a job right now. It doesn't mean that that's the job you're going to have next year or 5 years from now. But without that job, can you pay your bills? How long can you last if you lose that job today? And I think everybody now has to prepare to lose their job. I think you have to think worst case scenario. If I lost my job today, how long can I last? You need to be preparing for that day because it could happen. Make sure that you have 6 to 12 months of reserves put away, food, cash, because if you lose that job, you still got to pay rent. You still got to pay the mortgage. You still got to pay the auto payment. You still got to feed the kids. How long can you last? You in my book, you need to be able to last minimal 6 months. And if you can do it, make sure you have 12 months of reserves put away. That will take a lot of pressure off you. So if the worst case scenario happens, you lose your job tomorrow, you know that you're going to be able to go 6 to 12 months and you're not going to panic. So many people today, if they lost their job today, would go in panic mode because they wouldn't be able to feed their kids next week. They wouldn't be able to make the utility payment next week. They wouldn't be able to make their rent payment next week because that's how stretched they are. 30-year U.S. mortgage rises above 7% for the first time since 2000, fastest surge in history. I spoke to an agent today in Alabama who is looking at some properties for me. And he told me that sellers don't really realize that yet, that the reality hasn't sunk in yet, that rates are at 7%. But they're going to realize that in the next 30 to 60 days. And how are they going to realize that? We're going to realize that when nobody can get a loan to buy the property, when nobody can qualify for the loan because rates aren't at 2.87% anymore. They're at 7%, and that's with perfect credit. So the sellers haven't quite absorbed that yet. And if you're a seller and you have a house on the market right now, I would be the best priced home in the neighborhood on the block. I would make sure I was priced to be the next sale. And most sellers don't realize that yet. They still think that this is 90 or 180 days ago. If you're putting a house on the market, you need to be the best price home on the block today in order to be the next sale. You need to tactically put that price in a place to where it forces you to be the next sale. But yet most sellers won't do that. they're going to say, oh, my kitchen's better. I have a bigger yard. I have a nicer pool. Their emotions get involved. And so they're not the best price. And they're going to learn a very valuable lesson here, because the home won't sell. And then after 30, 60, 90 days, they're going to be asking their agent, what's happening? Why aren't I selling? And if your agent is smart, and if you have an aggressive agent, he's going to tell you, price the home today to be the next sale. Because if you get too far behind this market, you're going to start losing a lot of money, because this market is now correcting, and you do not want to get behind this market, because it's going to accelerate further down. And at some point, you're going to have to really begin discounting your home aggressively, and this is going to cost you a lot of money. And I'm going to finish with this last article coming from The Hedge. Gold is one of the best performing assets of 2022. This was an interview with Peter Schiff. Gold has outperformed U.S. bonds, foreign bonds, the S&P 500, foreign stocks. It's outperformed the NASDAQ. And yes, gold didn't go to 2,000 or 3,000 yet, but let's not forget, this is just the beginning. We have a super strong dollar right now that is really affecting the price of gold. How long will the dollar continue to do this? And when do the markets begin to realize that we still have a negative rate of 5%, even with the rise of interest rates? We still have a negative rate of 5%. That's a lot of inflation. And at some point, people sitting on cash are going to realize that. Institutional money is going to realize that. And as they continue to raise interest rates, I see inflation continuing to go up, and you're going to have to protect yourself. The only things that outperform gold are commodities, especially oil and agricultural goods, and the US dollar. And we're going to see a point in time here that gold is going to, I think, outperform just about everything. With what's happening in Russia, China, these new monetary systems, the amount of gold that central banks across the globe have stockpiled, yet they tell you it's a barbarous relic, you don't need it. You need NFTs, you need cryptos, you need make-believe money, you need paper, and you need digits on a screen. Don't do what they tell you to do. Do what they're doing. They're stockpiling gold. And at some point, when we really see pain and suffering in these markets, when we see inflation completely out of control, and God forbid the Fed does pivot in 2023, what do you think is going to happen to gold? It's been here 5,000 years. It's going to be here the next 5,000 years. It's not going anywhere. It's going to be, in my opinion, the best performing asset on planet Earth. And the two most undervalued assets are silver and gold. They're on sale right now. I think everybody should own them. People ask me where I buy from. You know where I buy from. I have a link down below, SD Bullion. Check out that link down below. I've been dealing with them for 4 years now. Solid company, great prices, quick deliveries. But look, I don't care. This isn't a commercial for SD Bullion. It's not a commercial for gold and silver. I don't care if you buy from SD Bullion. I don't care if you buy gold and silver. It doesn't matter to me. I make these videos. I share with you what I'm doing. And so far, gold has hung in there very well when you see the volatility in these markets. And remember, you can get to gold, you can get to your silver within minutes. People aren't just going to be able to get their 401ks out. They're going to have to pay taxes on them. You can't just go and get your money today. And if the systems go down, if there's a grid down, cyber attacks, if there is a run on the banks, they shut the systems down. We already saw that in 2008. They're not going to let you access your money. So when I see volatility like I'm seeing now, and when I see what the central banks are doing, when I see what Russia and China are doing, when I see what the BRICS nations are doing, this is why I believe it's the most important time to hold physical assets, not in a bank, not in a vault, but hold them where you can get to them, where you are your own central bank. Now, again, I don't care if you own gold and silver. It's up to you. I'm just sharing with you what I'm doing. And so far, gold especially has held up very well for what we're seeing take place. Silver more volatile, but silver is so cheap right now. But as I've said in the past, also cash. I'm holding a good amount of cash also. You know, if cash goes down, gold and silver go up. Gold and silver goes down, cash goes up. So I think that you have to play both sides of this and have both, because we're going to see volatility in cash, in gold. And so I think it's really important to own both. But at the end of the day, I think gold is the most important asset to be holding. And I think that we're at a time now where you have to begin counting your wealth in ounces and not in dollars. There's no doubt that the US dollar is on borrowed time. Gold isn't. Gold is going to be here for the next 5,000 years and on. So I'm going to leave it there today. Please comment down below. Let me know your thoughts. Please give this video a thumbs up, share this video, and make sure that you subscribe to this channel. And I look forward to speaking with all of you very, very soon.